we worked so hard to get here, and now to see it this way.
The California wildfires, devastating.
Everything that we know and love is gone.
And for many, uninsurable.
And these insurance people decided to cancel their fire.
In this episode, we talk to the outgoing CEO of Tower Insurance, Blair Turnbull, about the ramifications.
California was already struggling to cope with protection for homes and businesses, and this could tip it over the edge.
We ask whether New Zealand's ready for another major event.
We're not so great at risk adaptation and resilience. And why? Because it's hard.
And why he's going to run around an African mountain to relax.
Time to reflect.
Yep.
Over 250k, you've got quite a lot of time to reflect.
250k's.
250k, so there'll be a lot of huffing and puffing and grunting.
Welcome to the NBR Podcast. I'm your host, Simon Shepherd. All insurance eyes have been on Los Angeles. The loss of life and property compounded by the lack of insurance cover for fires. And one of those keenly watching is Blair Turnbull. In 4 weeks, the star CEO leaves Tower in great financial health, having navigated both COVID and New Zealand's biggest weather disasters this century. So Blair Turnbull, thank you for coming to the studio. I will ask you in a moment about why you are leaving. But first, we can't really ignore what's going on in Los Angeles. So I was just wondering, as an insurance expert, what your thoughts are when you look at those sort of apocalyptic scenes.
Oh, thank you, Simon, for having me. And yes, look, we've all been glued to TVs over recent days. It's absolutely horrifying. The sights, the impact. Of course, there's been loss of life. So, you know, one side of me is, you know, your heart reaches out for all the people that have been impacted. 12,000 homes destroyed, 25,000 acres of fires that are still raging as we speak. On the flip side, the insurance side, obviously I look at it through an industry eyes and really worry about what their response will be post the fires. California was already struggling to cope with protection for homes and businesses, and this could tip it over the edge.
Right. Okay. We'll explore that a little bit later on by what you mean by tipping it over the edge, because fascinating. But I did bring you in to ask you this main question, and that is, why are you leaving Tower?
Oh, look, it just feels like the right time for me, Simon. I've had 5 wonderful years. It's been a real privilege to be part of the team at Tower. I think we've been at the heart of it. It's never about one person. It's always about a team. It's, you know, if you love sporting analogies, you feel like part of a team. You know, I was lucky enough to be the captain of the team, and that's a great responsibility. But at the same time, it feels like, you know, you're lucky to have a chance to pick the right time. I'm grateful to have a chance to pick the right time. Tower's in a really good place.
Yes.
It's lean, it's fit, it's well positioned, it's very focused, it's streamlined. Now feels like a really good time to hand the baton over to a new person in the current management team.
But when you came into the job, like 5 years ago, you came during COVID, right? You came back from London, and at the time Tower reported a profit of 11 million. So what brought you back here into the insurance to lead Tower from London?
Yeah, I was lucky enough to have 20 years overseas working with different insurers around the world. The opportunity to come home, it was for family reasons, but the opportunity to come home and bring my 3 boys home and introduce them to Kiwi lifestyle was pretty attractive. The opportunity to work for Tower, which for me was, you know, a really iconic business right from my early days of my career, a chance to actually join that team was really fantastic. And so, yes, it's been a turnaround story. It's been a wonderful turnaround story. It's in a really good place. There's more to do. It's not the finished product yet.
But when you came here, is that why you were brought in, to turn it around? Is that your mission?
Yeah, it was. It was part of the mission. It was, the board obviously helped, along with management, set that direction.
Yeah.
Tower had been through a lot of changes, a decade of changes, especially, it's 155 years young, but really there were some quite big changes that came out post the Christchurch earthquake.
Yeah.
It went from an insurer, an investment business, a health business, a life business, to only focusing on general insurance. And really the story over the last 5 to 10 years has been on focusing Tower around being a general insurer and being the very best direct insurer down under. And certainly, my experience was working with technology, digital data, always working in the wealth and insurance space. But really I'd had gained experience from working overseas for 20 plus years to help bring that to Tower.
You need to
focus
modernise Tower and focus it.
Yeah, it was really around modernising Tower and accelerating it and streamlining the business to be the best insurance business it could be.
Looking at the houses, it's devastating.
Blair Turnbull modernised Tower whilst dealing with major insurance events.
Cyclone Gabrielle is the most significant weather event New Zealand has seen this century.
Add in the Auckland anniversary floods and costs escalated.
Combined, these two events resulted in more than 100,000 claims valued at over $3 billion.
It hit the bottom line, but Tower recovered. 2023, it was a massive year in terms of weather events and $1 million loss for Tower. And then last year, $74 million profit in 2024. How would you summarise that ride?
Well, Tower has been fun, not because it's been easy. So arriving in COVID and then looking into our biggest ever weather events in over 200 years, it hasn't been an easy one. But at the same time, those challenges, my claims manager at the time sort of said, large events are like steroids for insurance companies. You put a lot of change through very, very quickly. And I think the large weather events and COVID just reinforced some of the key things that we needed to be as a direct insurer. When I arrived operating in 8 countries, but we were very different across all of those businesses. What we have done more recently is really streamline the business such that wherever you are, if you're reaching and talking to Tower, you'll have a consistent customer experience on the same cloud-based platform. And I think as we see it today, the business is lean, it's fit, it's focused. It still has more to do, which is quite exciting, because right now as we sit here, one thing is real. Climate change is real. It's not a decision or a choice anymore. And we can see this from the events in California, the bigger storms, weather storms that we've seen in the UK and also on the east coast of the US.
That is amazing, isn't it? You look at one side of it and the storms, and then the freezing temperatures on one side, and then the wildfires. Incomprehensible. Yeah,
and I think that reinforces, insurance has a perception sometimes of being a grudge purchase. I've never believed in that, Simon. I think sometimes we haven't, as an industry, lived up to delivering the best customer experience, and we strive to do that. But I think it reinforces the importance of insurance and the role it can play in communities and businesses, and I think it's a force for the good in that regard.
A force for the good. That is true, isn't it? The perception has been over the years that insurance is a grudge purchase, and it can be one of the things that first goes when times get tough. And so you talk about navigating 2023 and Cyclone Gabrielle and the Auckland anniversary floods. Did you see, as a result of that, people saying, I'm just opting out of insurance as a result?
No, I'm delighted to say that, Simon, we haven't seen that. The industry hasn't seen that. It's may surprise some people, but New Zealand has the highest level of insurance penetration, general insurance penetration of anywhere in the world. Over 95% of all of our homes have private insurance, and over 93% of all of our motor vehicles are privately insured. And I think that at the heart of it talks to our culture. We recognise that we get storms and events and it shakes, and we value the role of insurance. We do value that. And here we are as, islands in the middle of the Pacific. We recognise climate has a big role to play. But we haven't, as an industry, always helped people really understand their insurance and therefore value it, and it's not as transparent as it arguably needed to be. And that's a big focus of Tower, is making sure that people see the fair and transparency side of insurance and help them understand the insurance and get the cover they need.
Because I would suggest to you that insurance has, or how it's calculated, to the average Joe, is a bit of a black box.
Absolutely right, Simon. And there's two things here that are really important and at the heart of what we do at Tower. We make it simple. We do, as a first principle, adopt risk-based pricing to help you understand the risks that apply to your home and help you understand those risks. And so, therefore, you don't get surprises at claims time, and you understand the premium that you pay, why you pay it, because we actually break it down and show what portion of the premium is allocated to the various risks.
So, as a result of those major weather events, risk-based pricing is the new norm, right? Do you have enough data to say to somebody in their house, these are the particular risks to your house and this is why I'm charging you an extra 20%?
We certainly embrace risk-based pricing. Not all insurers do. And I think a key point you said there, Simon, is that Tower, we're very focused on sharing that with customers. So quite often as an industry, we've been great at having all of this data, but not really sharing it. We're notorious at playing with ourselves and not sharing that as an industry or with customers. At Tower, we're absolutely focused on being transparent and fair about how we're pricing. That, in turn, helps people understand their insurance, value of their insurance, and also if they're facing into affordability challenges, they then have the flexibility to say, okay, I might increase my premium. I might change some of my cover so that it fits and suits me at this stage of my lifestyle.
You mentioned the magic word there, premiums, right? So as a result of those weather events, premiums did bump up a lot. I mean, I've got some things here from Stats New Zealand. I'll just have a quick look at it. Contents in 2024 up 28%, house premiums up 25%, car insurance up 22%. So the question is insurance becoming unaffordable for people, and are you seeing so-called insurance retreat, people just not taking out policies?
Well, look, we're absolutely focused. We all want, as an industry, insurance to remain accessible and affordable. But 2 to 3 years ago, we did see reinsurance costs around the world, as it was a macro challenge, increase significantly. And that was because there had really been a decade of losses in the reinsurance market and they needed to have a reset. That said, the good news, as we sit here today and looking forward, insurance premiums over recent months have flattened off considerably for both home and also motor. So in some cases, in some models, good models that have good technology don't have high propensity of being stolen and used for ram rates, good car models, you've actually seen some of those premium levels go down. So there's going to be some nice surprises.
Hang on, is that unheard of?
not unheard of, but hopefully it's a nice way to start 2025 for some customers.
Right.
But as a norm, as we look out, we certainly see low single-digit levels of insurance premium increases.
So those double-digit, 20 to 30% increases, at the moment, we're not seeing that.
We don't see that in our forecast.
Right.
That said, it has been a very challenging period, in the US and in the Northern Hemisphere recently. So we do have to have a close watch on what reinsurance rates are doing. Okay, we'll come back to the Northern Hemisphere in a moment. So you say it's been a quieter year on weather events and that car policies, maybe, it's even on some models, may have come down. What about general insurance in terms of the house and the contents? Is there any historical data to show that premiums ever come down? Look, I think, yes, there are some, and I'll give you some examples.
Yep.
And it's not often, sometimes it's not due to the risk, but actually the nature of the industry. So I had the benefit of working in the UK for 7 or 8 years prior coming back to New Zealand.
Yep.
And what we did see around 2004, 2005 was actually a lot of premiums did reduce due to the changing distribution model and the emergence of technology.
Right, so technology led to lower costs.
Technology led to that. And one of the things that we're very proud of at Tower is we differentiate around being technology, risk-based pricing, but also direct. Because
so you're cutting out the broker.
We're cutting out the broker.
So what does the future look like for insurance here? Blair Turnbull says climate change is the financial reality. But the question is, are we prepared for it? Is New Zealand building any resiliency?
I think taking one step back, Simon, what we are good as Kiwis, we're very good in response and recovery.
Yeah.
So we're really good in the moment. We've got a great culture where we all pitch in. And I remember very vividly on the morning of the Auckland anniversary events at 6 a.m, we were in the office. We were working with customers who'd been impacted and had water up to their knees. We'd already reached out to our Fiji Suva operations team. We'd introduced 75 of them were on the calls. They'd come in early to help take calls with New Zealand customers. And so we all pitch in. That's a real Kiwiana Pacifica trait. You know, we're very, very good in the response and recovery.
I got a sense of a but coming up here.
But the but is we're not so great at risk adaptation and resilience. And why? Because it's hard. Resilience is a hard slog. And I was lucky enough last week to be in the Bay, Hawke's Bay, Napier, and I was driving through. I was over there for my youngest at a cricket tournament, and I took time to stop and see the Esk Valley.
Yep.
And you look around, it looks just demonstrably different to where it did clearly 2 years ago. And there's now orchards growing, and the fruit this year has been phenomenal in the Bay. You know, it's so important we don't lose that muscle memory of what happened 2 years ago, and because the way it is we will get another storm. You know, it's not a case of, you know, if, it's only when. So we do need to build back and reflect on stopping building in silly places, you know, building back resilience into our stock banks and communities, because we will get future weather events. And we do need to build back and have that risk adaptation in place and the mitigation in place. And that's a hard slog that costs quite a lot of money, and you don't really see the benefits until the next event.
So we need to get better at that.
We do need to. And the councils, government, insurance and communities and businesses, we all need to work together to be better at building that resilience. You know, one of those ones, a key one for us in this beautiful country of ours with 15,000 kilometres of coastal, is we will see coastal inundation risk increasing with warmer sea levels and rising tides and the like.
And more weather
coastal
events.
inundation. We love being by the water. We have homes all by our rivers and by our seas.
Yep.
And they are now exposed to coastal inundation, and we've got to enjoy the coastline without building on top of it.
Yeah, one of the most recent reports into this was done by the Helen Clark Foundation just at the end of last year, which it said that 10,000 coastal homes in the major centres will become uninsurable by 2050.
I think it's possibly conservative.
Really?
We've got 2 million residential properties in this beautiful country of ours. Around 10% of it have higher propensity for flooding and coastal inundation.
10% of 2 million.
Yeah,
so we're talking 200,000 here.
Yeah, higher risk areas. Now, that's not to say all of them will be flooded, of course not. But that's to say that they will be exposed to higher risks as we look forward. And so, you know, we do have to respond to that. And that's, again, something that councils, government, insurers, communities have to work together. Don't build in silly places. So let's stop that now, and then let's start planning to do manage retreat in areas that will be facing into those higher risks of coastal inundation in the future.
What does the future of insurance look like for high-risk areas? Perhaps we should look at what's playing out in Los Angeles. In 2024, thousands there lost their fire cover.
California's largest insurer canceled or refused to renew 72,000 policies because of the wildfire risk.
The local governor believes the wildfires could be America's worst natural disaster.
I think it will be in terms of just the costs associated with it.
What's playing out in Los Angeles? Let's go back there. Last year, one of the big insurers, State Farm, decided that it was going to pull 70% of its policies in the Pacific Palisades, and that's the suburb. That's the biggest fire that's going on at the moment, and a lot of that suburb has been burnt out. So that's insurance retreat from the insurance industry's point of view. Is that the trend, I guess, that we are going to see from insurance companies?
Look, I hope not, but that, they may sit there and go, well done us, but they won't be sitting there saying, well done us, because you've seen the devastation of 12,000 homes, loss of life. No one benefits from that, no one. So that would be a false horizon.
Yeah.
But it's a worry, you know. Again, this is why we like risk-based pricing, because it's echoing and messaging to communities and businesses and councils. These are the areas of higher risk. You know, let's have those discussions around how we mitigate that and how we move back from the cliff edge, how we move back from the areas that are prone to wildfires and the like. And we can see from Australia are talking into these issues. They are starting to address them. They've had some big fire in the Grampians and the like in the state of Victoria this year, and it's been a lot less devastating. It was 4 or 5 homes as compared to what's happened in California, which is unprecedented, I think, previously. But you know, that's something we must learn from. We must respond to it. So we are good. We are very, very good, you know, in the moment and in the recovery. But we have to be better at the risk mitigation, and you know, managed retreat has to be it's a difficult conversation because it comes back to who pays, and that is challenging, but we have to have these conversations.
Los Angeles will be like a line in the sand, maybe, because there would be a lot of people there now who cannot afford to rebuild.
And we saw that through the previous hurricanes that went into Florida, around Tampa Bay. You know, only 1/3 of the properties that were impacted had private insurance. Go back to New Zealand, 96% of homes have private insurance. We have the highest of any OECD country. It's a real positive for New Zealand because we do recognise the impact of weather events and earthquakes and the like.
Yep.
We get constant reminders. Look to the US, and that is where it starts to play out in a negative way.
Yeah.
You can't get the insurance. People are gambling a little bit. You do never want to gamble with your home. You know, that's your biggest, for most families, that's your biggest asset. We don't want that situation to occur. If I look at California, you know, they were already in a financial hardship position as a state. It's going to be very hard now for them to continue to have, you know, any levels of comprehensive insurance in California. It's going to be very challenging.
Okay, well, we wish them all the best over there. I've got one last big question for the New Zealand industry. Competition. So the general insurance market here is highly concentrated. There's IAG and Suncorp. They own most of the brands. They write most of the policies. I'm just going to give some figures here. IAG, 4.1 billion. Suncorp, 2.8 billion. Tower, in third, was at 595 million. Is there a case for a market study by the Commerce Commission into the general insurance industry?
Well, first principles, competition is good.
Yep.
And certainly we're very, very proud of our challenger status, and we're the last listed Kiwi insurer, and we're very proud of that. And it's really nice to be back in the top 50 this
that's
year,
true,
which is great, because you want, you know, part of that is being financially strong and stable. But the challenge is we're a market of 5 million, with a team of 5 million. And so as an insurance, big global insurance businesses, and size does matter. You have to invest in a lot of technology. There's a lot of governance, a lot of infrastructure that goes in behind it, and of course the capital. And so you have seen a consolidation of insurers globally. As challenging as a market of 5 million in the second riskiest place in the world, you know, with earthquakes and natural perils, it is challenging to attract insurers into this market. But we have shown as Tower that you can be a good business, you can be profitable, you can give a really good customer experience, you can operate. And again, more than 9 out of 10 homes have private insurance, most of our motor vehicles. It's an attractive market.
So the market is working.
The market's working, but you know, it's important that we keep adapting and innovating. We've got to see it that way, because the risks to not having it are quite frightening in a world that has increasingly, you know, climate change coming at it, and insurance is in the front row of that.
So you are leaving the front row in about 4 weeks, okay? Where to next?
Oh, look, I'm just absolutely
Are you
focused,
retiring?
Simon. No, I'm too young and with 3 teenage boys. I can't retire yet, that's
No.
for sure. No, I'm very focused on finishing on a really good high note and handing over really well to the management team. It's a great management team, great board, and I'm doing that at the AGM. I'll then take some time out. I'm going to run around in circles around Mount Kilimanjaro, which is a strange pastime.
Tell me about that. So that's ultra running
It is.
around Mount Kilimanjaro in, is that Tanzania or Uganda? Tanzania.
Yeah.
Why?
Oh, look, long story short is, I do love the outdoors. I'm a history geek. I'm a data geek. And I do love the outdoors. And I've got a great mate that I'm going with. And strangely enough, I find it quite therapeutic, running in beautiful places around in circles. It strips it all back. I hope I come back a slightly better person, time to reflect.
Yep.
Over 250k, you've got quite a lot of time to reflect.
250 Ks.
250k, so there'll be a lot of huffing and puffing and grunting, but it'll be beautiful. It'll be absolutely beautiful. And in somewhere, I've been lucky enough, very, very lucky. I'm a scrawny kid off a farm in Southland. I've been very lucky to see some beautiful places around the world and through running and through my family and the like. But, the chance to go and see Tanzania and Mount Kilimanjaro, Africa's highest mountain, and huff and puff my way around it is pretty exciting.
And that wraps up the first regular episode of the NBR podcast for 2025. I hope the new year is treating you well so far. Thanks to content producers Jake Latham and Joseph Hisayasu. And for early access to new episodes, subscribe at nbr.co.nz. Up next is The Clock Ticking for TikTok. I'm Simon Shepherd. We'll catch you then.